Recapping the key events and themes that we've seen in the markets this week, let's start off with the euro. So it has come under pressure this week on the back of the German election results over the weekend, where German Chancellor Merkel is set for her fourth term. However, in terms of her CDU and CSU parties, they were not dominant actually in those elections. So consequently, now he'd need to hold further coalition talks in order to solidify her position in power of the government. And essentially this has caused some weakness and uncertainty for the euro currency. So we've seen it selling off anyway since it's hitting those highs at 120.60 roughly, and it has been coming off, but added pressure on the back of these results. Just note there's some firm bids seen between around 116.50 and 117.50, and we've already seen a bit of a prop up for the euro dollar, trying to consolidate or recover some of those losses it has encountered on the back of those German elections. Looking over in the United States then, surprisingly from Janet Yellen, we saw some hawkish commentary from her, noting that the Fed should be wary on moving too gradually on monetary policy, and that it would be imprudent to wait for inflation to rise to 2% before making a move on interest rates. So quite hawkish. I really don't think, just in my opinion, that the Fed should be in any position in moving as aggressive as they are. And when I say that, it's in terms of hiking before the end of this year. I don't think the economy can warrant such moves yet. But nevertheless, Janet Yellen is the boss, and she wants to move forward with that, despite inflation still remaining subdued in the US. But nevertheless, we saw a large amount of dollar strength across the board. Well, it remains very well supported. In terms of the dollar index, it is coming into or encountering some resistance around the 93.50 area, but it has pulled back quite considerably in terms of the losses it has encountered over the last few weeks. Over in Canada, we did have the Bank of Canada governor speaking. Well, it's quite surprising actually, a large amount of Canadian dollar weakness on the back of some comments. They did pretty much signal open-ended monetary policy outlook for Canada, which could see interest rates move in either direction. And the reason for that is amid fears of rising household debt in Canada. So as I say, we did see a bit of weakness for the Canadian dollar. If we look at loonie, dollar CAD, a large spike high we observed, encountering some resistance around the 125 figure. And to be honest, I think we're long overdue now for that continued move south. I know it's not as hawkish as some were anticipating for them in terms of their aggressive moves that we have been seeing and catching the markets off guard, but nevertheless, you know, they've left it in a balance, and we could see the Canadian dollar continue its path to strengthen. So keep an eye on that. It could be a good opportunity, dollar CAD or loonie, to short that now that we've seen a big bit of consolidation. Very lastly then, looking over in New Zealand, the RBNZ rate decision, they did keep rates and policy unchanged for the time being. They note they are to remain very accommodative on monetary policy, and they will adjust that if need be. And they're actually quite downbeat on some economic points, and that's inflation still to remain subdued for the foreseeable future in the coming quarters, and GDP, they're seeing that lower as well, which is not good. So that did consequently weigh on Kiwi across the board. So just keep that in mind in terms of going forward with your trading. Other than that, guys, that's it from me. I hope you've had a smashing trading week, and look forward to reporting the key events to you next week. Thank you.